Welcome to the Brendan Ecker Influence. It is March 24th, 2026. Larry Fink just released his share letter to investors, and at the same time, the prices are going pretty rampant. At the same time, XRP, Bitcoin, we are getting more and more clarity via the Clarity Act and the movements in the Senate. On top of that, oil's moving. All of the prices, all of the markets are moving essentially because of the Iran war, and the news is swirling everywhere that, this is the Great Reset. And so I think this is going to be a financial reset, and I think we're going to see it all. So I wanted to go over Larry Fink's letter today. I wanted to go over some of the trending stories on X and why it affects crypto and where we're going at. So let's take a look at the markets today. So I first wanted to start off by reading this letter by Larry Fink. Again, he released this to his investors. He often releases these share letter investors. These share letter releases to his investors. Larry Fink's 2026 annual chairman letter to investors. Again, I did cover this in yesterday's episode on Ecker Geopolitics, where I talked about this a little bit. And I already kind of did some coverage of this, but it is a big story. So what did you guys think about that? So we're going to talk about that a little bit. But let's take a look. You can honestly we'll watch my own reaction to it because that's honestly where we're at. All right.
With clients and leaders around the world. And lately,
or you could watch the full reaction anytime. You could just go to that episode. Iran war continues, Trump, Israel, Tehran, and what happens next. Again, that's on Ecker Geopolitics. But I also wanted to cover the markets. We're going to cover that story. We're going to cover the share letter. We'll talk about it a little bit. But this is what the markets are looking like, guys. This is where we're at in crypto. I think things are coming back around, essentially. Overall, I think we're in a pretty good place for success. I think overall, crypto is going to be revolutionary. I think it's absolutely going to change the game of how we all see money, how we do money, how things really operate, right? So Bitcoin's at $70,165, Ethereum's at $2,142, XRP's at $1.40, and Binance is at 631, USDC, always going to be where it's at, about $1, right? Stable coins. Solana is at $89. Tron is at 30 cents. Dogecoin is at 9 cents. Cardano is at 26 cents. Chainlink at $9.15. Monero is at $340.50. Stellar Lumens, which is XLM, 16 cents. And then World Liberty Fi, again, sitting right where it's typically at. So why did the markets go up today? Why did the markets go down today? Right? Why did these markets crash? The fear and greed index was at 32 yesterday. Today it's at 31. The crypto market is down 1.74% to $2.4 trillion in 24 hours, primarily driven by the geopolitical uncertainty and risk-off liquidation cascade. Shows a strong correlation, 62% with gold, indicating a shared macro-driven move. Primary reasons: geopolitical volatility from conflicting U.S.-Iran negotiation reports triggered a broad risk-off move, leading to over $26 million in Bitcoin liquidations and market-wide sell-off. Secondary institutional profit-taking and technical weakens amplified the decline, with the fear and greed index dropping to 30 and the market testing key Fibonacci support near 2.38 trillion. And then, of course, near-term market outlook. If the SEC approves the remaining XRP ETF batch by the March 27th deadline, it could stabilize sentiment. However, a break below the 2.38 trillion support could extend the decline forward to 2.29 trillion. So the deep dive: geopolitical uncertainty triggering risk-off moves. Overview: conflicting reports of U.S.-Iran peace talks created sudden volatility. Former President, I don't know why I keep saying former President Trump. He's still the president, right? President Trump claimed productive talks, but Iran denied negotiations, leading to renewed uncertainty and a spike in oil prices. This macro shock prompted a flight from risk assets, including crypto. What it means: crypto is acting as a risk-sensitive asset, closely risking macro headlines. The 62% correlation with gold highlights its current role in broader inflation hedge and uncertainty-driven positioning. Watch for clarity on geopolitical developments and any official statements that could reduce uncertainty. Leverage, unwind, and institutional positioning. Derivative data shows total volume surged 63% to $327 trillion, while open interest fell 5.5%, signaling aggressive position closing. Bitcoin liquidations total 26.19 million in 24 hours, while shorts outweighing longs, indicating forced selling. What it means is that high leverage built up during recent rallies was quickly unwound, exasperating the downside move. The fear and greed index dropping from 32 to 30 confirms sentiment deterioration. So as we look at all of this, the conclusion tells us that the sell-off was triggered by a macro shock and amplified by a larger unwind. The path forward likely hinges on the SEC's XRP ETF decision this week and whether the market can defend the 2.38 trillion support zone. Will regulatory clarity be enough to offset the current geopolitical risk premium? So this is what we're really going to find out. What is coming with the Clarity Act? Where does this come into play? How does this impact the markets, right? Because that's ultimately what everything comes down to. We have the entire market moving based off of the Clarity Act, right? So here's the gold markets. We're going to be going back to crypto. We'll talk about Larry Fink's letter here in just a moment. We're going to be getting up to that. We'll do a little bit of coverage on it. Again, I covered that a lot in last night's episode on Ecker Geopolitics. We cover geopolitics Monday through Thursday at 7 p.m. Eastern. The gold prices today are at $4,440.80 per ounce. Silver is at $70.92. Platinum is at $1,931.70. And palladium is at $1,456.70. So the precious metals market is going back up. So everything's fluctuating based on this Iran war, essentially. That's kind of what all of this comes down to, is the Iran war, Trump's statements on the Iran war, what he has to say about it, and where we kind of are on all of it, right? That's kind of what's going to determine the ultimate future for crypto and for gold, for everything. And that's kind of the key to understanding where we're at in these markets, right? If you don't understand this, then it's going to be hard to really adapt and to stay on top of all of this. Again, if you didn't see the last page there, because we were kind of just glitching out a little bit, this is where we were at. This is just kind of covering the gold prices, $4,440.80 per ounce for gold and $70.92 for silver. Silver and the precious metals have been taking a hit. Again, that screen may have just gotten frozen there a little bit. Got to always continuously check these. So again, crude oil is at $91.26. Brent last day financial futures at $102.59. And the New York Harbor ULSD futures is at $3.99. And so, and of course, the E-mini crude oil futures are at $91. So we're pretty much sitting around from $90 to $100 right now, but we are exceeding $100 per barrel for the Brent last day financial futures. So these things are absolutely taking an impact on the market. All of these things are absolutely happening, right? So there's no denying that ultimately there's going to be some major shifts. Again, Larry Fink's 2026 annual chairman letter to investors. He released this, and this is basically outlining tokenization. I read it yesterday again, and we talked about it in yesterday's episode. And really, it is more about tokenization. It's about the future of digital assets. Really artificial intelligence, AGI, all of these things. And it talks about how these are going to be the future markets to focus on. Markets are driving more economic growth. In a period of significant uncertainty, a growing share of economic value is being created in capital markets. That creates a powerful opportunity, but only for those investing in those long term. Growth is reaching too few people. Countries are investing more at home. Wealth has flowed mainly to asset owners, and AI could accelerate that trend, creating more value but concentrating it among those who are already invested. And then the opportunities to broaden ownership, expanding long-term investing through retirement systems, early access, and modernized markets can help more people share in economic growth and build long-term financial security. And again, the entire letter's here. You can read that at blackrock.com. Again, I covered it in yesterday's Ecker Geopolitics episode. You want to go back, look at that, feel free to do that. But these or you could pause this video and you just kind of look through this yourself. We're not going to read the entire letter because I covered most of this yesterday. And again, you can go back to that episode on Ecker Geopolitics. But Larry Fink was essentially talking about how tokenization is going to be the future, right? So take a look at this. At 5% U.S. employment in skilled trades is projected to grow faster than the 3% national average. So look at this. Those getting into electricians positions, HVAC, elevator installers and repairers, carpenters, plumbers, pipe fitters and steam fitters, iron workers, installation workers, construction equipment operators, welders, masonry workers, skilled trades on average, than the national average. So look at that, 3.1% versus 9.5% growth for electricians. That's how many electricians are in demand right now. Notice none of these are white-collar positions, but all of these jobs that are basically going to require humans, guess what that's also going to require? In order to get leads, it's going to require you to adapt with AI. BLS Occupational Outlook, this is from the BlackRock Handbook of 2026. Data last modified by the BLS as of August 2025. So the United States, people often want to invest in their own country's financial markets but don't have the means. A BlackRock survey shows that a third of Americans don't have $500 for an emergency like a car repair. In fact, many are forced to pull money out of the markets just to make ends meet. Last year, a record number of workers withdrew money from their 401k plans so they could cover financial emergencies. So yeah, these are real issues happening in the United States economy. That's absolutely true. And especially because of this war, it's not helping anybody. So guys, take a look at this entire article by BlackRock, Larry Fink, his investor's letter, and he kind of covers what's coming next. He kind of covers what's happening with AI, what's happening with the digital economy and all of it. So it's definitely some powerful stuff. Clarity Act update, crypto and banks and bank reps head to Capitol Hill to review stablecoin deal as detail remains under wraps. So again, this is more breaking news. The stablecoin yield deal is moving through its next stage. So yeah, all of these things are happening. But despite this, there is still contention in the markets. Okay, there's still big things happening in the markets that are unpredictable. And that's what we're going to look at right now. We're going to look at some of these markets. We're going to actually analyze what all of this actually means, okay? So now let's go over to Twitter X. Let's take a look at what the markets have to say about the Clarity Act and where we're kind of going right now, right? So Ondo Finance posted, Larry Fink just compared tokenization to the internet in 1996. In his 2026 annual chairman's letter, the BlackRock CEO made the case that tokenizing stocks, bonds, and ETFs could democratize investing the way that internet democratized information. Half the world's population carries a digital wallet on their phone. Imagine if that same digital wallet could also let you invest in a broad mix of companies for the long term as easily as sending a payment. Tokenization could help accelerate that future. BlackRock manages $14 trillion in AUM and is already deep in the space, but with nearly $150 billion in digital assets under management, including BUIDL, the world's largest tokenized fund. Key points from the letter include that digital assets could enable easier investing through tokenized bonds, ETFs, and fractional assets, potentially democratizing market access. $65 billion in stablecoin reserves, signaling deep institutional commitment to digital finance. Clear regulation on investor protection and digital identity isn't a barrier to progress. It's the infrastructure that enables it. The CEO of the world's largest asset manager just put tokenization at the center of the annual letter. This institutional case for the technology has never been clearer. So when we look into Grok and we look into what this actually means, Larry Fink's 2026 letter positions tokenization as a pivotal upgrade to the financial infrastructure, enabling digital wallets to simplify long-term investing in tokenized stocks, bonds, and ETFs, much like the internet's early democratizing effect on information. So Ondian Finance amplifies this by citing BlackRock's $14 trillion AUM and $150 billion digital assets, including the leading BUIDL and tokenized fund. So essentially, when we look at these other articles, we know that this is massive for the markets. This is definitely going to impact everything, right? So let's take a look at this. I wanted to look into this article a little bit and what this really meant for the entire crypto industry as a whole. Okay, so this was a big article. Justin, Clarity Act draft bars stablecoin yield on balances. A revised draft of the Clarity Act has been revealed. The proposal bans yield for simply holding stablecoins, according to CoinDesk. Rewards tied to balances would not be allowed. Lawmakers aim to avoid similarities with bank deposits. The move reflects pressure from the banking sector. Debate around stablecoin utility is intensifying. Activity-based rewards will still be permitted. However, the framework remains unclear on implementation. So when I looked up what this actually means for the entire market, it said the Clarity Act's revised draft as of March 2026 most directly impacts U.S.-based crypto platforms, stablecoin holders seeking passive returns, and the broader DeFi ecosystem, while providing a clear win for traditional banks. Here's the breakdown of who feels the effects most, ranked by severity. U.S. retail and institutional stablecoin holders. Biggest day-to-day losers. Passive yield on idle balances, earning 3 to 5% just for holding USDC or similar wallet/exchange accounts, gets banned gets banned to prevent stablecoins from functioning like unregulated bank deposit. This removes a key incentive for keeping dollars in the crypto ecosystem. Many users already chase higher yields, 5 to 15%, offshore platforms or certain DeFi protocols. Result: everyday holders lose easy set it and forget it returns. Capital may shift to activity based rewards, trading, payments, staking, liquidity provision, or flee to non US platforms/wrappers. Critics argue that the drivers of capital flight offshore rather than protecting banks as stablecoins more instantly cross across borders. Centralized platforms and exchanges, especially Coinbase, Circle's partners. Platforms like Coinbase that offered or planned rewards on USDC balances face restrictions. The ban targets yield solely for holding, closing to distributor loophole from the earlier Genius Act. Short-term revenue hit from the reduced user incentives to park stablecoins on platforms. However, activity-based rewards, loyalty programs, trading volume bonuses, payment incentives remain allowed, so platforms can pivot. Some analysts see this as a net neutral or even bullish long-term, as full regulatory clarity boosts institutional adoption and locks in compliant leaders in Coinbase. Issuers like Circle USDC are already barred from the direct yield under prior law. This extends limits to affiliates, DeFi protocols, and on-chain innovation. The ban disadvantages yield-native products built around passive holding. Positive carve-out: truly decentralized protocols and activity like lending, liquidity provision, or staking often fall outside heavy restrictions. DeFi can offer yields via usage, not idle balances. Net effect: forces innovation toward active participation, more dynamic DeFi strategies rather than simple savings accounts. Some view it as bullish for Ethereum, Base, or DeFi ecosystems that thrive on usage, but it adds friction for U.S. users and may push liquidity offshore. So, traditional banks and credit unions and the clear winners. The American Bankers Association and community banks lobbied hard, warning of up to $6.6 trillion in potential deposit flight risks in stablecoin offered competitive passive yields. This provision protects their core deposit base, which funds lending to consumers, small businesses, by ensuring stablecoins stay primarily as payment tools, not interest-bearing alternatives. Banks avoid direct competition from unregulated crypto deposits while still gaining broader crypto market structure clarity. Broader context and trade-offs. U.S. crypto industry overall. Short-term pain for user growth and product simplicity, but the bill's progress, potentially advancing to Senate markup soon, brings much-needed regulatory certainty on jurisdiction. The SEC versus the CFTC, DeFi carve-outs, and market infrastructure, seen as bigger long-term positive by many. Offshore/non-U.S. users, largely unaffected directly. 85% of stablecoin volume is international, but global fragmentation could grow. Consumers versus incumbents. Critics call it protectionism that hurts everyday users and innovation to shield banks paying near zero interest while earning more on reserves. Supporters frame it as preventing systemic risks and deposit substitutes without proper oversight. In short, the U.S. crypto users and platforms relying on passive stablecoin incentives lose the convenience, banks gain protection, and ecosystem must adapt toward activity-driven rewards. Whether this slows U.S. adoption or simply redirects it to more useful on-chain behaviors remains the big debate. The final language will determine how strict the activity-based carve-out really is. So then I asked which tokens benefit most and will take the most negative impact of the top coins: Bitcoin, Ethereum, XRP, XLM, HBAR, Solana, etc. The Clarity Act stablecoin yield ban, no passive rewards on idle balances, but full allowance for activity-based ones like payments, transfers, liquidity provisions, staking, or platform usage, has zero direct impact on the listed top coins: Bitcoin, Ethereum, XRP, XLM, HBAR, Solana, etc. These aren't stablecoins. These are These are restrictions target USDC, USDT style users and platforms to prevent deposit like competition with banks. Instead, the bill's broader market structure clarity, CFTC versus the SEC jurisdiction, and digital commodity classifications, as well as DeFi carve outs, is a net positive for virtually all major non stable coins and tokens. So, biggest beneficial and clear winners: XRP, XLM, HBAR, and the other ISO 2022 aligned payment tokens. So, let's take a look. Why they win the hardest? The Act classifies them as digital commodities, not securities, ending years of SEC lawsuits / uncertainty for XRP in particular. Activity-based stablecoin rewards, example for transfers, payments, liquidity, directly supercharge their real-world utility in cross-border payments and enterprise rails. ISO 20022 integration, global financial messaging standard, gets a massive tailwind now that stablecoins are locked in as pure payment / settlement tools rather than yield products. Ripple / XRP gets explicit mentions as poised to explode under regulated markets. XLM and HBAR follow the same playbook for banking / institutional flows. Short-term, bullish narrative boost plus RLUSD, Ripple stable, adoption of XRPL. Long-term, trillions in potential payment volume. That's huge. Bitcoin. Why it benefits. Banning passive stablecoin yields removes a competitive savings vehicle, potentially redirecting idle capital into Bitcoin as the ultimate non-yielding store of value. No DeFi payment / friction for Bitcoin. It's pure digital gold. Overall clarity plus commodity statues equal ETF, custody, and institutional allocation. Some analysts explicitly call this surprisingly positive for Bitcoin. Strong positive activity-driven winners are Sol and Ethereum. Again, Solana and Ethereum, both classified as digital commodities under the Act / SEC guidance. Activity-based rewards are explicitly allowed. Staking, liquidity provision, governance, and DeFi participation all qualify. DeFi ecosystems, especially Ethereum's L2s and Solana's high throughout DeFi / meme coins, thrive on usage, not idle holdings. The carve-out preserve on-chain yields while forcing more real economic activity. Short-term liquidity dip possible if stablecoin parking slows, but long-term, clear rules equals more institutional DeFi inflows. Ethereum even called out for a surprising rebound in some coverage. And then the least impact or / mildly neutral to positive is also ADA, Doge, and Chainlink. They also get the same commodity clarity boost with the minimal direct ties to stablecoin yields. No major losers among the established layer ones or blue chips. The pain is isolated to stablecoin issuers / platforms. Circle, stock / CRCL down sharply today. Coinbase revenue model pressure. So that's kind of what's going on there. So XRP seems to be the highest beneficiary of this entire thing, right? Of this entire movement we're seeing with the Clarity Act and all of these new laws coming out. It seems like XRP is coming out on top again and again and again. This isn't a crypto versus banks zero-sum game for these tokens. It's crypto infrastructure clarity that favors utility and activity. XRP, XLM, HBAR ecosystems, and Bitcoin stand to gain the most immediately. Ethereum and Solana benefit long-term via DeFi. No listed top coin makes a meaningful negative hit. The real losers are passive stablecoin reward models and platforms built around them. The bill's progress, Senate markup likely soon, is broadly bullish for the entire non-stablecoin market. So that's pretty huge news, right? So that is what's pretty much the newest information when it comes to crypto, when it comes to that. When it comes to today's biggest news, I would say that that's that. Okay, Investico takes over Superstate's $900 million tokenized treasury fund, enters $12 billion market. $2.2 trillion asset manager Investco U.S. Has acquired management of Superstate's $900 million tokenized U.S. Treasury Fund, USTB, making its most direct move yet into the rapidly growing on-chain fixed income market. The takeover positions Investco alongside BlackRock and Franklin Templeton. Hey, look at that. Ripple just acquired Franklin Templeton or partnered with them as the third major TradeFi giant now actively competing in the $12 billion tokenized U.S. Treasury space. USTB instantly becomes one of the largest tokenized treasury bonds under the control of a traditional asset manager. So, again, we know that XRP, the company Ripple, made a partnership with Franklin Templeton maybe 6 months ago, 7 months ago? We followed this, we tracked this, and now what do we have? XRP, Ripple being called basically the number one beneficiary of this entire Clarity Act after all of these new laws are being made, the Commodities Act, and all these different things. And now Franklin Templeton's making moves, which is an acquired company by Ripple, or a partnered, if I'm incorrect there, a partnered company by Ripple. Tomatoes, tomatoes. So ultimately, this entire market's going to be moving big. Crypto's going to be huge. There's really no other way that the U.S. economy is going to be able to keep up with anything really going on unless we actually do rely on crypto. Again, like Trump said, we're going to have to write them a little crypto check, right, in order to pay off that debt. United States is insolvent according to the U.S. Treasury. Yeah, and again, this is why the U.S. Treasury just declared the U.S. insolvent. The media missed it. So let's read this article real quick, very quick, by Steve H. Hankey and David M. Walker. Steve Hankey is a professional applied economics at Johns Hopkins University and member of board of directors at Federal Fiscal Sustainability Foundation. Yeah, and so he believes that the United States is insolvent, right? So if we're insolvent, how are we going to make that money? Well, it's going to have to be from crypto, right? This comes from the Anthropic CEO. Big news. 50% of all entry-level lawyers, consultants, and finance professionals will be completely wiped out within the next 1 to 5 years. Grad students and junior hires are cooked. Yeah, so let's take a look at this little 5-minute video, and we'll talk about what
brainstorming,
he has
putting
to say
together
here.
a financial report makes me worry a lot.
Okay, so let's take a look. Let's rewind this. So this is a big statement. AI is taking over, right? This is what we do. We build AI systems, and let me tell you, the AI is getting so good that essentially the people who don't know how to build it, the people who don't know how to use it, they're going to be really struggling. Okay, and so one thing I do, Brendan Ecker, CEO of Gold Shark Media AI, we build software apps, we build lead generation apps for entrepreneurs, and essentially we have our own software that we allow you to use, and basically it pretty much follows up with all of your leads. It connects with it has multi integration. It's pretty powerful stuff. But ultimately, it's about getting you more clients, right? We have our own AI system. We help build AI systems for entrepreneurs. So shoot me a DM and work with me if you're looking to grow your business, because this is crazy news. Look at this.
So just to back up a bit, I've been working on
This is the
AI
CEO of
for
Anthropic
10
slash
years,
Claude.
and probably the thing I've noticed most about it is how fast it's making progress. 2 years ago, it was at the level of a smart high school student. Now it's probably at the level of a smart college student and reaching beyond that. And on one hand, I think there's a number of very positive things that are going to happen. I used to be a biologist. I think AI has exactly the kind of skills that are needed to cure important diseases like cancer and Alzheimer's.
Yeah, I totally agree.
To provide cheaper energy, many positive things. But exactly those same kind of skills, things like summarizing a document, brainstorming, putting together a financial report, makes me worry a lot that entry-level jobs in areas like finance, consulting, tech, many other areas that, entry-level white-collar work, I worry that those things are going to be first augmented, but before long replaced by AI systems, and that we may indeed. It's hard to predict the future, but we may indeed.
What do you guys think about that? Do you guys think this is overblown? Do you guys think this is overblown? Do you guys think this is real? What do you think the risk is for AI? What is the risk of AI in your job position today? Okay, how is AI impacting your job today?
Pipeline for these early stage white collar work starts to contract and dry up.
What's the timeline here?
Yes, so it's very hard to predict these things given how fast AI is making progress. But I would not be surprised if somewhere between 1 and 5 years.
I would say that's about an understandable timeline. I would say about 1 to 5 years, you're going to see lawyers, consultants, finance people. They're going to be replaced by AI, but it's not going to be what he's saying. I think that a lot of this is overblown because this is a big market. AI is a huge market. These CEOs are trying to make money, right? The CEO of NVIDIA just sold a bunch of their shares. Peter Thiel, he ended up selling a bunch of his shares at Palantir. So AI is this huge market. They're trying to make it profitable, so they're trying to scare the public a little bit. Now, a lot of this is true. Obviously, lawyers, consultants, finance professionals. Yeah, obviously, a lot of this is going to be replaced by AI. The AI is amazing. I mean, I can create an entire app for basically doing your taxes, for example. You can create an entire app for this. Don't do that. You need a license to do all of that. But I'm just using this as an example, right? You can create all of these apps rather quickly if you have any kind of 125 IQ, I would say. If you have a high enough IQ, you're able to build this stuff yourself. That's why I offer to do it for other entrepreneurs, because it's not necessarily the easiest thing. You got to know you have to know some basic coding. You got to know some basic tech. I think a lot of people are going to be left behind when it comes to a lot of the AI that's coming and how it's going to replace jobs. It's going to be quite disruptive. So let's keep going.
I've heard a number of people talk about this in private. AI CEOs talk about this in private. CEOs of other companies talk about this in private. And I really felt that the message that this is happening hasn't been getting out to ordinary people, hasn't been getting out to our legislators, our Congress people either. And so I felt I needed to speak up on the record. I do think that this is something we can prevent this, but we need to act now. I don't think we can stop the AI bus. There are 6 or 7 companies just in the U.S. working in this area.
Totally.
I just run one of them. Even if our company stopped doing what it was doing today, all the other companies would continue. Even if all 6 companies started, then China would beat us.
I think the scary thing about all of this is what AI is going to really be able to do, how disruptive it's going to be to CEOs, really when it comes to a lot of the attributions, the efficiency of AI, and the efficiency of sending emails, creating domains, creating websites, landing pages, and then also being able to merge that into an actual product that works, right? Claude had a lot of their data and their information stolen by DeepSeek. This is a big scandal. It just happened maybe a month ago. We covered it. We got a YouTube episode covering it. But this is huge, right? So a very disruptive market when it comes to AI and what's going to be happening with all of this.
Big and important threat. So we can't stop the bus, but I do think we may have an opportunity to steer it. Yeah. And I think, we need to get Congress people, legislators, the public to think about this now. One of the first steps we're taking is just measuring the effects. Anthropic has put out something that we call our economic index. And using the economic index, we try and track the rate at which these things are happening. At some point we have to go beyond measuring this to actually taking action, to trying to build our AI systems in a way that augments rather than replaces. But that won't be a long-term solution either. We need to think about what the government is going to do. And there's a wide range of actions that the government could take. And it's not my place to decide.
And they're already doing it. The government is already basically tracking everybody's stuff using Claude. They're already basically wanting to go into Claude, and for military purposes, they want to be able to collect data on the American people and then basically find the highest IQ people and then also the most dangerous people. They want to be able to track you and use this artificial intelligence, these chatbots, to do that. And they're already doing that, right? ChatGPT is doing that. All your data is going to be saved. Whatever you're generating with AI, it's already being tracked. It's being stored into a database. We are in a social human experiment. And so those who are using AI to grow their business, those who are using AI to really become more proficient, more efficient, more learning new skills, those are going to be the people who adapt and endure to the future, right? So you got to learn how to build AI. If you don't, work with me, shoot me a DM. I'll teach you about how to do it all. Again, we're going to do an episode one of these days where we just build out an app right in a live stream, and I'll teach you guys how to do all of this, and we'll teach you guys how to basically stay up with this. You could be an HVAC guy, you can be a contractor, whatever. We're going to make a whole YouTube episode where we teach you how to do all of this.
Those are correct, but I think the first step is people need to think about this and start taking it very seriously.
Yeah, and you're talking about AI possibly wiping out all entry-level white-collar jobs and spiking unemployment to 10 to 20%. So dive into the mitigation.
And again, I think that's a lot of fear-mongering,
How
too.
could we mitigate the worst possible?
There's so much money involved in the AI market that they have to kind of, ramp this up a little bit.
I don't have a crystal ball. I can't predict the future. But what I will say is I think what AI can do, there have been these technological changes in the past, but I think what's different about AI is it's broader, it's deeper, and it's moving faster than previous such technologies.
Gets faster every second. Gets better every second.
One is
every
just
prompt.
Educating people in order to use AI. There will always be people who are using AI and helping our workers to adapt faster. I think is an important move. A second move is that we may want government to kind of find a way to level the economic playing field. And this may be a controversial proposal, but something like taxing AI companies like us, we may need to get.
And that's a very interesting message coming from you, who runs an AI company. But you're doing a public service announcement for all of.
So taxing the AI companies, that's very interesting what he said there. So basically, because AI is going to become so profitable that they're going to have to make it fair and a level playing field for people who don't have AI companies. So that's really interesting observation there. Again, we covered that story. We covered that headline. Huge news. Again, we have also more Iran news. Wanted to cover some of these stories happening today. Also, Kuwait declares war on Iran and today has launched its first offensive, a ground of ballistic missiles against Iran's targets. This is now a world war. Absolutely. I would definitely agree with that sentiment. Yeah, I mean, this is what happens, This is what happens when you let another country control your wars, right? We are in this war with Iran for the state of Israel, in my opinion.
Surface and other program objectives.
So this is a big story. Breaking news, NASA Administrator Jared Isaacman announces plans to build a permanent U.S. base on the moon. The plan rolls out in 3 phases: rover and tech deployments, semi-habitable infrastructure for astronauts, and ultimately a permanent human presence on the lunar surface. Isaacson called it humanity's first permanent surface outpost beyond Earth. So let's check this out. Pretty cool.
It's worth pointing out that shifting NASA workforce priority to the surface, which has lots of advantages for safety, tech demonstration, and science, it's really the proving ground for future Mars initiatives, does not preclude revisiting the orbital outpost in the future. We will build the moon base in 3 phases.
A lot of people think we didn't even go to the moon. Do you think that's a
support
conspiracy
industry by
or
moving from
truth?
Infrequent, bespoke efforts to a templated approach that will generate significant learning through experimentation. We will dramatically expand lunar landings through the CLIPS and the
Nice.
LTV program, delivering rovers, instruments, and technology payloads that test mobility, power systems, such as working with international partners and industry on the production of RUs and RTGs, communications, navigation, surface operations.
It's about time, though. Like,
all the science
can we all agree that if it wasn't for Elon Musk, NASA would pretty much be nowhere?
to semi-habitable infrastructure. And
Like, seriously, without
logistics to
SpaceX,
enable
and where would
supporting regular
NASA really be
operations
today?
on the surface. It's at this point we anticipate seeing the significant contributions from our great partners, like JAXA's pressurized rover. Phase 3 takes advantage of the affordable mass-to-surface capabilities that cargo HLS will inevitably provide in the years ahead, and enables the permanent infrastructure necessary to sustain a human presence, such as
Cool.
Italy's proposed habitation module. The moon base will not appear overnight. We will invest approximately $20 billion over the next 7 years and build it through dozens of missions.
Don't you love how the government's just always handing out billions of dollars? Like, literally just this past week, Pete Hegseth's like, yeah, we're going to spend $200 billion on this Iran war. And then now he's like, yeah, this guy for NASA's like, yeah, we're going to spend $20 billion on going to the moon a second time and we're going to put an outpost up there. It's like, where's the American people's money? Like, I guess this is a golden age, you could call it, but where is the revolution, right? We need to see that crypto revolution for the masses. We have to enrich America again. Before we can ever send astronauts there, the American people in the world needs to become enriched again. And I think it'll be crypto that does it. I really do.
Together with commercial and international partners towards a deliberate and achievable plan. Just as there was Mercury and Gemini before Apollo, there will be an evolutionary path to building humanity's first permanent surface outpost beyond Earth.
That's
And
awesome.
we will take the world along with us as they follow along on the NASA Moonbase website and watch the assembly through lunar relay and observation satellites.
Cool. And so that's what NASA's up to today. That's the stuff we should be working on. That is what we should really be focusing
Despite some
on
very
as a
real hardware
nation,
and
for
schedule
sure.
challenges,
That's where we need to be. Alex Mason, I like this account. Alex Mason Crypto posted, everything is going according to plan. Nothing here is random. Bitcoin cycle bottom will look exactly like this. Remember, I was the only one publicly calling the exact bottom at 16,000 3 years ago and the top at 126,000 in October. If you missed those calls, don't worry. I'll call the next one too. Turn on notifications. If you're not following yet, you'll understand why that was a mistake. Later. Yeah. So, good account. Decent content. Israeli tourists are burning land, not in Argentina, not in Palestine, in America. They may tell you it's fake news, but it's a real false flag. What do you guys think? Yeah, Nebraska is burning 1,000 acres or so, something like that. It's completely burning. What's going on in Nebraska, right? What is going on? Justin, the Trump administration has launched a national campaign promoting the Product of USA label. It's exclusively for meat, poultry, and egg productions from animals born, raised, harvested, and processed in America. Awesome. Made in America is the way to go. I would agree.
Open up the markets, support our farmers. We'll see even more affordability moving forward. Chicken down 2%. Cheese
Yeah.
down.
So that's huge. Big statements there. Last two times silver peaked, Bitcoin exploded. Now silver seems to have peaked around $121. Now, does that mean Bitcoin will rally? I don't know. I guess we'll find out. Big DTCC's Nadine Chaker says they're compressing 50-plus years of U.S. market plumbing into 55 weeks as they eye bringing $100 trillion on chain. Ripple is already wired into DCC rails. Ripple's prime hidden road, HRFI, NSCC directory is connecting pipes to volume. So what do you guys think about this?
That's here. It's like you said, we settle for $4
I'm
quadrillion
going to start this over. We're just
a year, which
stupid
is true.
thing
I
is
don't
just
know if you
glitching
guys
out.
know how many zeros are in a quadrillion. I had
One
to,
second.
I had to Google
Put
that.
this
my
at full
first time,
screen.
so you get.
Because
Anybody
everything
want to
is
take
glitching
you
and
can't Google it
slow.
right
Is it
now.
16?
You're close. 15.
God, so annoying.
So,
so annoying.
Right, but or put $100 trillion on our platform. Like that was, we had grandiose ideas on how we can transform the markets, but not at the scale. So you need scale, you need resiliency, and there's no better institution.
So awesome.
That
I
can
love when
enable
stuff
all
doesn't
that.
work. That's crazy, though. Yeah, big news. News of Bank of Montreal partners with CME Group and Google Cloud to launch 24/7 tokenized cash and deposit platform. Bank of Montreal has partnered with CME Group and Google Cloud to introduce 24/7 tokenized cash capabilities for institutional clients built on the Google Cloud. Huge news there. Also, breaking news, the housing market 30-year mortgage rate jumps back to 7% for the first time since August. Huge. Yeah. So mortgage rates go back to 7%. Not good, and I'll say that as a realtor, it ain't good. 30-year mortgage just hit 7% again. The timing couldn't be worse, and that comes from No Limit. If you follow his account, he's pretty good on predictions and analysis, so you guys should follow him. Coin Bureau also released a post, shocking if true. Trump's 5-day pause of the Iran war is roughly the same amount of time it takes for thousands of U.S. Marines to arrive to the Gulf, a reporter claims. 2 units of 5,000 Marines are currently en route, joining 50,000 U.S. troops already in the... Sorry, I was just waiting for the rest of this to open. Joining over 50,000 U.S. troops already in the region, those Marines could seize Iran's Karg Island, cutting off Iranian oil exports and controlling the Strait of Hormuz, coincidence or not. So that is a huge, huge development. We will see what happens with that. We're going to be following that over the next few days. Let's take a look at this. Gold's correction before the $100 trillion debt crisis. Stay in touch with the WhatsApp channel. So this is from Egon von Greyes.
I will come back to the end of this recording where I see the metals going. But first, let's look at what drives the precious metals. One of my favorite graphs is the growth of the U.S. debt, federal debt. This slide here I've published since Trump was elected in 2017. And basically what it shows is that every president has on average doubled U.S. debt every 8 years. So it's really quite simple to extrapolate where debt is going to go over time. It doesn't go exactly every 8 years, but on average, that has been the case for the last more than 50 years. So if we look at now, when Obama took over in 2009, debt was $10 trillion.
Yeah, you guys can go watch that full
That's
video.
a lot since it grew from when Reagan became president in 1981. It was under $1 trillion.
But again, nothing works, so sorry about that. Again, massive opportunity in XRP. Let's watch this little clip real quick. If it'll work. Everything's being really slow and glitchy for me right now.
You're now underpinning some of the crypto markets.
Take a look at this.
Do you see blockchain really making an impact even to traditional capital markets?
Yeah.
Like, where's the value?
Well, I actually think you brought it up. I was watching you before. So if you think about post-trade, there's a lot of inefficiencies in the post-trade processes across every asset class. And there's some reasons for it. I mean, so we have to recognize that sometimes there's some friction for a reason. That could be for risk management, could be for netting, it could be for allocations, things that we have to address and modernize. But we do think blockchain technology can really streamline post-trade processes across the world.
Blockchain's going to be crazy. It's going to be huge.
So if we do it right, we can actually make that an opportunity to deliver more capital into the system. The second is collateral mobility. So I know that Ripple is really focused on that, and so are we. So we have Calypso as our trade infrastructure technology for the banks and broker community. And in that, we have collateral management, which I would say is the most used module within the solution in terms of optimizing.
Ripple's making moves.
But what we really love about the idea of digital assets is being able to move that collateral in a much more seamless way. If we can create that collateral mobility.
Exactly, instant payments. That's why XRP is the best.
It will free up a lot of capital. I mean, there's just so much capital trapped, whether it's in clearinghouses or clearing brokers, that I think could really be freed up if we kind of create an ecosystem with digital assets as the underpinning.
Totally.
And then the third area is in payments, and that's an area that I know Ripple is extremely focused on. We're not a payments company, but we care about payments just in terms of having that free flow of capital around the world and allow investors to be able to express themselves globally in a frictionless environment. And so
that's what Ripple focuses on. Instant payments, 1,500 transactions a second. Unit of account, has a CEO, has a team. They were before Bitcoin.
Yeah, I mean, I would love to. I know I've seen the number before. I mean, we're talking hundreds of billions, if not maybe even $1 trillion of capital that you could free up if you can move it more seamlessly, if you can streamline post-trade processes.
And that's what Ripple does, exactly that.
Payments in a much more frictionless way.
So everybody talking about Bitcoin, they're sleeping on XRP and what exactly the company Ripple does, what exactly XRP does as a currency. So again, Alex Barnicoat, 4 hours ago, breaking news, the UK are sending their best submarines to Iran. What are your thoughts on this? Again, this war is ramping up. We're not getting out anytime soon. I predict that the oil markets are going to hit, the oil is going to hit $200 plus per barrel because we are going to be in this war for a while.
But it's also equipped with the UK's.
So let's take a look at this. Start it over here.
The Tomahawk ground attack. Some breaking news, the UK has sent their best submarine to Iran, and they might be about to go to war with Iran. Well, today, the UK's HMS Anson, their best nuclear-powered submarine, arrived in the Arabian Sea off the coast of Iran. And not only is this submarine equipped with Tomahawk land missiles and Spearfish torpedoes, but it's also equipped with the UK's nuclear missiles. But first, the Tomahawk ground attack missiles on board this submarine have a range of 1,600 kilometers, meaning this is the first time the UK is now capable of carrying out an attack onto Iran. So far throughout the war, the UK has been too far away to carry out an attack. But now that's changed, and Iran is within striking range. But the UK has also got Spearfish heavyweight torpedoes on board this submarine. And those are torpedoes which could sink Iranian warships and blow them to pieces. And not only that, but as I said, this nuclear-powered submarine is equipped with the UK's best active and working nuclear missiles. Now, I want to make something clear. This comes only a day after the UK allowed the US to start using our military bases to carry out offensive strikes against Iran. And because of that, it seems the chances of the UK joining the war are really increasing. Polymarket, a place where you can predict world events, predicted 2 days ago that there was a 2.5% chance the UK would strike Iran by June the 30th. But after these two things, the UK allowing the US to use our bases and sending a nuclear submarine, that chance has now increased. And Polymarket has changed from a 2.5% chance of the UK joining the war by June the 30th, and it's now a 4.3% chance. And so the chances of the UK joining the war are growing, especially now that the UK is doing things.
Do you guys
like
think the UK will join the war? Do you guys think everybody will come to Trump's aid? Will everybody come to America's aid for the Iran war, or will they let America and Israel fight this war on their own? What do you think? What do you think?
Now, the UK still maintains the fact that they're only acting in defensive measures, and they're not interested in going to war with Iran. They say they only want to protect British lives in the region, and that's it. Now, to be fair, the UK so far has not carried out any offensive strikes onto Iran. They have shot down many Iranian drones and missiles, but they've not bombed Iran yet. They've allowed the US to use their bases to do that, but we haven't done it ourselves. But still, the UK has sent HMS Anson, one of our most powerful nuclear-capable submarines, to Iran. And so this makes it one step closer to the UK joining the war and going to war with Iran.
What do you guys think about that story?
Leave me a follow, because I'm going to be the first one to keep you up to date on everything that you need to know around the world.
Yeah, be sure to follow Alex Barnicoat. Great account there. XRP Army is the ultimate bull signal. Bank of International Settlements just dropped their updated Basel III monitoring dashboard, and XRP is now in the top 5 crypto underlying banks reporting exposures for it. So that's pretty big. Big news, Germany's right-wing anti-Islamic migration party just surged in the West Germany state elections. U.S. B-52 bombers are now officially launching strikes against Iran from the UK's RAF Fairboard base. That's according to Fox News. They're fully equipped with satellite-guided 2,000-pound penetrator bombs that need to be dropped 8 to 24 kilometers from the target.
Iranian-backed proxy forces in Mosul and more C-17 transport flights have left the United States with paratroopers and likely special operations forces aboard bound for the Middle East, Bill.
Wow.
Crazy.
That is a lot, Lucas. Thank you.
They're
Lucas
going.
Tomlin.
The war's going to go on. Trump will make statements that maybe we won't. But I don't see that happening. New York Stock Exchange partners with Securitize to develop a 24/7 tokenized securities platform. So again, the New York Stock Exchange, they're making their moves too. Terrifying revelation. The reporter points out that Trump's 5-day pause in the war is the exact amount of time it takes for thousands of Marines to arrive to the region. He also used the announcement to manipulate the stock market, absolute chaos and deception. Yeah. Someone filmed this from a passenger plane from the world needs to see it. Every single ship is stranded, going nowhere. This is what it looks like behind a blocked Strait of Hormuz. This is what war does to world trade. Crazy. Look at that. So that's the Strait of Hormuz right now. This is what it looks like there. If you were passing the Strait of Hormuz today, this is what you'd see. And forget not that there are a ton of mines, naval mines, 4,000 to 6,000 of them. In the meantime, we have robots basically taking all of our jobs. Look at this video. It's over, they say. Yeah, maybe it is. Maybe it is for humanity. These robots they're doing shit. They have a function, and they're good at it. What's coming, guys? What's coming? Peter St. Orange, PhD, I like this guy. Home sales hit a wall, falling 18% in a single month, the worst since 2008 crisis. Problem is mortgage rates, they're too high to buy, but sellers are trapped in cheap COVID-era mortgages. So let's take a look at this video real quick. We'll break this down.
Last one,
a little update on the markets. I like this guy.
The drop took home sales is 500. Home sales just crashed a fifth in a single month. That's the worst since housing was crawling out of the 2008 financial crisis. Some regions were even worse. Sales in the Midwest fell 34%. The Northeast was down 45% in a single month. Last one to sell, turn out the lights. The drop took home sales is 587,000, which is just half what they were during the pandemic.
Now, guys, if you are looking to invest in cryptocurrency, I would recommend for anybody to use iTrust Capital, the smart and secure way to buy and sell Bitcoin and gold, okay? And it's also a great way to hold your XRP and cryptocurrency. Yeah, you want to hold your assets. You want to be able to trust what you're investing in, right? And so I'm a big fan of iTrust Capital. Be sure to use that for sure.
50,000 lower than 2019 when there were 20 million fewer people in the country.
Wow.
Oddly, homes trying to sell are up an impressive 4.9% year on year, while prices are now down 7% on the year. So there's more homes for sale, they're cheaper, but nobody's buying. So it's the problem.
Nobody has money in the market.
Mortgage rates, they are too high for buyers, while sellers are locked in too cheap COVID-era mortgages. So when COVID hit, the Federal Reserve printed almost $7 trillion, which was about $1 in $3 in existence before COVID. They did this to buy lockdowns. Low-income voters could make more sitting on the couch watching videos of dancing nurses than going to work. 5 of that 7 was so-called quantitative easing, where the Fed types zeros on an Excel sheet in the basement, declares its money, and buys everything in sight. The other $2 trillion of counterfeiting, or monetary expansion, was farmed to Wall Street by offering them money at just 0.25% interest. Basically free money when inflation was turning a massive profit for them. That pulled down mortgage rates, which at one point in 2020 were just 2.6%, and they stayed under 3% for over a year. So that was a heck of a gift to anybody with the credit and down payment to buy or refinance, because if mortgages
not
are
everybody can do
when
that, right?
Inflation's driving home prices 15% a year, you are literally getting paid to borrow. So anybody who bought the median house and put 10% down made a profit of nearly $110,000 thanks to COVID and the Fed. The problem is house prices are now flat to down. They're down 7% across the nation. So there goes the free money. Meanwhile, mortgage rates have now doubled to 6.4. That means the half of mortgages initiated during COVID under 3% would double.
Again, I said this as a real estate agent. This is a big time. We're in a war, and we have a lot of new assets emerging, new markets emerging. Work with me. I'll be your real estate agent. If you're looking to buy, sell, or invest in real estate in Michigan, work with me, Brendan Ecker. I will help you set up that transaction, that deal. We'll get it done, and we'll find you the best deal. Again, mortgage rates are crazy today, right? Nothing is really predictable anymore unless you're working with somebody who knows what they're doing. So work with me, and you work with my team too. You won't just get me, you'll get my team. We have a pretty good team over here, and we're good at what we do. We have experience working with buyers just like yourself. Particularly, I focus on commercial properties. I focus on more luxury, but we also work with residential and all of that. So be sure to work with me if you're looking to invest in Michigan real estate.
Their payment if they moved and bought an identical house. They go from $1,300 a month to $2,500 a month, and most Americans do not have $1,200 a month lying around. So they're stuck. They may want to sell, but they can't afford to sell.
Right.
So is the solution either house prices have to come down a lot, like a third, which would devastate older Americans who hold $19 trillion of home equity, which is about a quarter of their retirement, or else mortgage rates have to come down a lot. So this is why Trump's been pounding the table to get too late Jerome Powell to cut rates. Unfortunately, he's now up against a war that is pushing up mortgage rates through inflation. So in 3 weeks, mortgages are already up a half point on the war, and they will keep rising if the war keeps going, making housing worse.
Agreed.
So it's next brought to you by Trust Capital. Both Trump and Congress are trying to fix housing. Trump's focused on building more homes, so getting rid of regulations, restrictive zoning, rent control, and chasing institutional buyers out of the market, while Congress, of course, is focused on giving money to low-income buyers. Now, both weak at the margin, but both are up against the Fed's mortgage hole that is now getting worse. Follow for daily videos. Okay, we'll be watching. See you next time.
Again, that was Dr. Peter St. Onge. He's pretty good. I like his content. Justin, XRP Ledger just entered a whole new territory. Genomic identity, zero knowledge proofs, certified labs in Nigeria, all anchored in the XRPL testnet. Breaking, Michigan sheriff just arrested a U.S. citizen for posting a Jewish meme. He says the First Amendment makes people feel empowered, emboldened, and safe. I think this cop should be deported to Israel. So again, I didn't say that. I'm just saying what people are saying because apparently this Oakland County sheriff.
I'll give you this by way of example. Some pond scum felt empowered and emboldened enough to put this picture of me up to try to threaten and intimidate me, which of course he did.
Big deal.
Because I signed up for this.
Big deal. You're
and
a cop.
by the way, the person that did this said a bunch of terrible things, not just against me, but against a lot of groups and individuals, who, by the way, was arrested today in Wisconsin. My point is this.
Arrested for this? For posting a meme? For posting a meme. You had this guy arrested, you tyrant. That's like, what? How offended can you be? Seriously, like, this is the country we live in where these are the people who will destroy the First Amendment. These kind of sheriffs, these kind of people. He's offended by a post somebody made of him, a meme. You're a government official. Yeah, people are going to make memes of you. Yeah, you represent the government. You're a police officer. Yeah, you're going to be made fun of sometimes. Yeah, that's kind of the nature of the internet, genius. And then you have this guy, like, arresting people for making memes now. So it's like, apparently this guy had, like, a real problem with this meme, and he called this guy who lived in a different state, by the way, he had him arrested for this. Insanity.
Person is emboldened and empowered enough.
Losing our First Amendment to these kind of cops.
To do this for me, what does he do to a kid? What does he do to a Jewish family walking down the street?
Oh, yeah, he sounds like him.
And that's because of the normalization of this. Watching this on television and saying, okay, I feel empowered enough that I can do this.
Okay, well, sorry, brother. Yeah, there is a thing called freedom of speech. You're absolutely allowed to say what you want. And if you don't like the memes that people say, then don't be on social media. I mean, sorry, but it's public domain. That's not against the law to post a meme. And just because they made something about a government official doesn't make it any less, legal. Sorry, it doesn't.
Well, A, you can't. And B,
my rights don't end where your feelings begin, Sheriff. Sorry, Sheriff. But because you're offended by memes on the internet, now you want to go and crush everybody else's First Amendment? We will resist you. You will be rejected. You will be denied. And this thin blue line that the real cops represent. We are not going to go and arrest people for freedom of speech. So all I know is, as long as I am wearing this little thin blue line, as long as I represent law enforcement, I will never enforce that law. Just because somebody makes a meme of myself or however they were to make it, that doesn't mean they don't have the right to have that opinion. Everybody's entitled to their opinions, right or wrong. And so, obviously we don't condone hate. We don't condone any of that, but this was not hate. It's a meme. It's funny. That's what it is. It's funny. It's hilarious. And it's like you got the thought police, like the Oakland County Sheriff over here, who really feels like, you shouldn't be able to have an opinion or to say anything that's genuinely funny. It's funny. It's like, big deal. It's like, get over it. Like, seriously, get over it.
If you think you can do it to somebody that's in law enforcement, again, what are you going to do in an alley or in a street to a Jewish family or a kid walking down the street?
Would you think because you're law enforcement, you're entitled to not, have anything said about you? That's just so confusing. Because you're law enforcement, you think people don't have the right to have an opinion about you? You think because you're law enforcement, people don't have the right to make a meme about you? Look at the entitlement of these people. I say this as a cop myself. This isn't a real cop that you're looking at. This is a guy who climbed the ladder. He is a placeholder. This is a dude who has no real backbone. And he is the thought police, and he wants to change the Constitution and the First Amendment because he's offended by the opinions of people who are allowed to have opinions. These are tyrants. This is the war that we're against in America. So shame on you, Sheriff, Oakland County Sheriff. Shame on you, where you're kind of acting like a pussy, and you deserve to be made fun of. Because honest to God, seriously, stop trying to ruin everybody's First Amendment. My rights, the American people's rights, don't end where your feelings begin, sir. So, I hope more of those memes come out. I hope more of them are made in response and in rejection to your attempt to silence dissidents and to silence anybody who has an opinion. I hope more memes are made about it. Breaking Binance to terminate margin support for XRP/Binance and 14 major altcoin pairs. Binance is set to suspend borrowing on 14 major margin pairs with the full delisting and forced closure of all remaining positions scheduled for March 27th. Notable affected pairs include XRP, Binance, Avalanche, Ethereum, Atomic, and Bitcoin, and then Ethereum Classic and Bitcoin across both cross and isolated margin accounts. Users who don't manually close their positions by Friday will have them forced liquidated at market price, with Binance explicitly disclaiming responsibility for any losses incurred during forced liquidations. So, yeah, this is huge. What do you guys think about all of the major news, all of the massive news? Pretty much seeing the recycled stories happening now. So that is the financial market update for today, March 24th, 2026. What do you guys think of everything going on? Honestly, I think it's going to be a big future. It's going to be a crazy future. Hopefully you guys are ready for the Clarity Act. Hopefully you guys are ready for the Iran war to continue. I think that that's going to keep happening. And I also think that you're going to see continued ramped up warfare in Iran. You're going to see continued movements in the financial markets. Real estate markets will probably continue to really pretty much stay where they're at, depending on what happens with this war, really, right? So invest in the future, buy low, sell high. Obviously, be sure to invest in AI. I help entrepreneurs build AI. That's exactly what I do. I'm kind of a tech nerd myself. I'm good at building out those systems. So if you need somebody to do that for you, you need somebody to work for you to be your app builder, whatever it might be, that's kind of where I'm skilled, right? I'm a little bit of a nerd, so I enjoy building AI. I enjoy building softwares and apps. I'm kind of good at it, and it doesn't take long for me. Right? Doesn't take long for me because just, I've been doing this a long time. I helped build a lot of these, AI infrastructures that you work with and use today. So work with me. We'll make something magical. We'll make something masterful. And at the end of the day, I have nothing else. I'll see you at 7 p.m. tonight Eastern on Ecker Geopolitics, where we'll be covering the political news and all of the biggest stories happening today. So stay prudent, stay powerful, and stay wealthy. And I will see you next time.